Welcome to your Optimal Personal Economy podcast with Justin Bennett. Your personal economy is your ability to create, protect, preserve, and utilize your wealth, your financial world. Justin will share strategies and stories to help you optimize your personal economy. Now, on to the show with Justin Bennett and co-host Matt Halloran.
Hello, and welcome to another podcast episode on Your Optimal Personal Economy. This is Justin Bennett. And today I wanted to talk a little bit about the timeliness of what we have on the horizon, which is a presidential election. So it's calendar year 2020, and there's a presidential election in the not so distant future, and it's starting to gain a little bit more excitement and focus and attention. I think it's important to think about that presidential election and, frankly, any other presidential election through the lens of what may or may not happen with the market, and whether somebody's Democrat or someone's Republican, or whether there's a Democrat coming into the White House or a Republican coming into the White House. I mean, it just seems like there's going to be conflicted views on what one thinks may happen, depending upon if it's blue or red and what those persons stand for. But we actually have a pretty cool piece that we can share with our listeners as a follow-up for those that are interested. But it's simply looking back on the market. So the actual piece is called The Student of the Market. So it's providing education. It's an election year special piece. And so, for example, if we looked back to January 1st of 1926, which was a long time ago, and you put $1,000 to follow the S&P 500 index, and we allowed that $1,000 to do what it did over all the different Democrats and Republicans that served in the White House, whether it be 4 years or 8 years or however many years they served, and we just followed the $1,000 through time. We just traveled with the $1,000, and we looked at the value of that $1,000 June 30th, 2020. The value of the $1,000 would be $8.96 million. So I think the takeaway is that stocks or equities have continued higher regardless of which presidential party one may be behind, and or regardless of which presidential party may be in the White House. But yet there's still going to be the excitement going into the final election and what may follow post-election, whether it be Democrat or Republican that wins the race. So it's just an interesting thing to think about, because over an appropriate amount of time with respect to your investments, which is part of your planning, if you're not looking to take an approach that's trading, it's very easy to kind of subscribe to a trading approach, but rather an investing approach. An investing approach is more of a long-term horizon. You do appropriate planning that addresses your protection, addresses your liquidity, allows you to take a long-term view of your investment accounts. You could then see that history, which of course history is no indication of future performance, but history over many, many, many years, both Democrats and Republicans in the White House have suggested that the U.S. stock market at large has done well and has increased. Now, of course, there's been periods of time where it hasn't behaved nicely for a number of reasons, but you wouldn't get caught up for over a short-term period if your account comes in slightly because you're not using the account for a short-term period. We would never suggest to a client that they should invest money that could lose value if they have a short-term horizon. I mean, that just wouldn't make prudent sense. So I thought that was pretty interesting. Another thing to think about as it relates to U.S. stocks during an election cycle when you look at the performance of U.S. stocks and the average annual return during the period of time of January 1st, 1926 and December 31st, 2019, which again is a pretty long period of time, but the years when there was a presidential election, the average annual return of the U.S. stocks is 11.3%. 11.3% is the average annual return of U.S. stocks during presidential election years. Okay? And so this is just something that I wanted to point out because there's going to be excitement between now and the election later this year. And it's very easy to subscribe to the sensationalism of what that may look like, both at the final election, shortly thereafter, like days and weeks thereafter. But I think there's oftentimes sight that's lost as to what's going to happen years, decades after. And I think it's expected that in most cases, most investors will expect that the U.S. economy at large, the U.S. stocks are going to do well over a long-term period. And so therefore it helps consumers determine how they want to position their money. Right? So the other point to make is stocks aside, equities aside, there's historically been a lot of excitement around these election years, and there's a correlation to raising cash, raising money, money funds or money market accounts. And so 2020, right? So the year that we're in currently, there's significant amounts of money that have flowed into cash. Specifically, 980 billion US dollars have actually flowed into cash in this calendar year, which is pretty big. That's January 1st of 2020 through June 30th of 2020. So it's been a very, very large amount of money. $980 billion has flowed into cash in 2020. So there's obviously a lot of cash on the sidelines. Now, historically from, let's just say, the period of time of February 1st of 1993 through June 30th of 2020, during presidential election years, over that range of time, there's been about $114 billion that's flowed into cash or money market funds. So when you look at the comparison, we're in a year where there's been a large amount of influx into cash, and so there's obviously the unknown as to what's going to happen with all that cash in those money market funds or those money market accounts post-election, and how that's going to trickle down and impact the economy and the businesses, both public and private. So these are just some things that I think are interesting. At least I find them to be interesting. And I'm just looking here at this document, the Student of the Market document, and there's just a lot of valuable information that we're happy to share with folks. But when you look at this conversation of new versus incumbent presidents, right? What may happen if the incumbent president is reelected versus what may happen if a new president is elected. And so just again, history is no indication of future results or what may be expected or what may actually happen. But it's interesting to see that from January 1st of 1928 through December 31st of 2016, so again, a pretty large range, when there's been a new president elected, okay, the stock market or the stocks have performed at 9.3%, the calendar year during that presidential election. Okay? When the incumbent president wins, stocks performed at 13.4% during that calendar year of the presidential election. So it's just interesting data. It's interesting information. It perhaps moves us away from this thought process that, if this president is reelected or this incumbent potential president is elected, what may happen with stocks, with the economy. Of course, if one's Democrat, if one's Republican, vice versa, there's a lot of conversation. But I think the reality is that nobody truly knows what's going to happen. And so that's why it's most critical to make sure that you're properly structured within your planning, you're properly balanced, you're mindful of what has occurred in the past over the long term to gain a better understanding of how to properly position yourself both now but also going forward. And you give yourself the appropriate and realistic time horizon that you should give yourself based on things that are important to you and how to position the money in relationship to what's important to you. So if you're looking to accomplish something in the short term, well, we would never want to see you take on risk associated with that money because you could lose it. And so you may not want to be exposed to that downside while trying to have some participation in the upside if it happens over a short term, because it's very, very tough to measure things over the short term. So I just think that this piece about stocks, the economy, the United States, historically how it's occurred during presidential election years, this year happens to be one of them. Again, we're happy to share it. There's a lot more data. There's a lot more information that can be provided by way of requesting this PDF. We're happy to share it. Give some consideration to how your planning is structured both now and into the future. If you want some help, give us a ring. We're happy to figure out what you have in your life, what you have on your balance sheet, what your planning currently looks like, help you self-discover what's important to you, and maybe there's a chance for us to develop a relationship, and it's okay if we make a mutual determination that timing isn't appropriate to develop a relationship. But nonetheless, this is again Justin Bennett, Your Optimal Personal Economy. Feel free to check us out, download, subscribe, and feel free to listen along. We appreciate all the listeners, all the allegiance, all our clients, all the people that care, because we care a lot about you. Look forward to our next episode.
Justin Bennett, registered representative of Park Avenue Securities, LLC, PAS, OSJ Northeast Planning Corporation, 1150 Raritan Road, Suite 201, Cranford, New Jersey, 07016, 908-709-0020. Securities products offered through PAS, member FINRA SIPC. Financial representative of the Guardian Life Insurance Company of America, Guardian, New York, New York. PAS is a wholly owned subsidiary of Guardian. Bennett Financial Group LLC is not an affiliate or subsidiary of PAS or Guardian. California Insurance License Number 0H88104. This podcast is for informational purposes only. Guest speakers and their firms are not affiliated with or endorsed by PAS, Guardian, or Bennett Financial Group LLC, and opinions stated are their own.
S&P 500 Index is a market index generally considered representative of the stock market as a whole. The index focuses on the large cap segment of the U.S. equities market. Indices are unmanaged and one cannot invest directly in an index. Past performance is not a guarantee of future results. 2020-109434.